Good morning, students. I hope you had gone through the videos and you will send me my answers on my email ID. Now we are seeing the basis of accounting. From the viewpoint of timing of recognition, the revenue and cost, there can be of two broad approaches of accounting. These are cash basis and accrual basis. Now, what is cash basis is known to you, totally cash. Under the cash basis, entries in the books of accounts are made when cash is received or paid and not when the receipt of payment becomes due. Under cash basis means when you are due receive. Suppose you are paying your fees, right? So when school will write it in cash basis when school is receiving fees. आपकी फीस बाकी है उसको नहीं कंसिडर करा जाएगा कैश बेसिस इसलिए यानी कि सिंपल पेमेंट एंड रिसीविंग ऑफ कैश sorry. Let us say for example in office rent for the month of December 2014 is paid in January 2015. It would be recorded in the books of account only in January, that is 2015, in cash. Similarly, sale of goods on credit in the month of January 2015 would not be recorded in January, but say in April when the payment for the same is received. Thus, this system is incompatible with the matching principle, which states that simple this method is inappropriate for most organizations of it is calculated as the difference between the receipt and disbursement of cash. So, what is under accrual basis? Revenue accrual means that whenever the transaction is done, at that time only it is recorded. Means financial years ends on 31st March of every year. So before that, whatever it is due, that is also to be recorded. Right. Under costs are recognized in the period in which they occur rather than when they are paid. See, salary of an employee is left to be paid on the month of March. In the month of March. Right. So my accounting year ends on 31st March 2000, suppose 9/20 को मेरा मार्च एंड हो गया पर मैंने अब तक अपने एक एम्प्लॉय का 10,000 सैलरी पे नहीं किया है so what will I do? I will write it in my final account outstanding salary and that amount of 10,000 will be returned for that financial year only. I'm not going to write when I'm going to pay. मीन्स जो महीने का एक्सपेंस है उसी में हमें लिखना है उसी ईयर में लिखना है आउटस्टैंडिंग वैसे इनकम राइट दैट इज beneficial so that is followed right. Thus under this system the monetary effect of the transaction is taken into account in the period in which they are earned rather than that in the period in which it actually received or paid in enterprise. This is more appropriate basis for the calculation of profit as expenses are matched against the revenue and rate earned in relation thereto. For example, raw material consumed for match against the cost of goods sold. Accounting standards. There are certain standards that to be maintained. So there are accounting standards are written by policy documents covering the aspects of recognition, measurement, treatment, presentation, and disclosure of accounting transactions. Financial statement. Accounting standards in authoritative statement issued by ICAI, professional body of accounting in our country. The objective of accounting standard is to bring uniformity in different policies in order to eliminate non-compatibility of financial statements for enhancing reliability of financial statements. Secondly, the accounting standard provides a set of standards, accounting policies, valuation, and uh, norms and disclosure of requirements. Right, so these are all accounting standards. Why we need for accounting standard? You can go through this. What are the benefits of accounting standard? Accounting standard helps in eliminating variation in accounting treatment to prepare financial system. Whatever the common system is to be followed. So if anyone is following different kind of methods, that can be eliminated. Accounting standard may call for the disclosures of certain information which may not be required by law, but such information might be useful for general public investors and creditors. Accounting standards facilitate comparatively between financial statement and intra companies. Limitations can be seen by you. So applicability to the accounting standards for proprietorship unit, that is a single owner business, uh, business businessman or owner would be a single entity business partnership more than one person, that is two or more than 2%. Then societies, you know very well, corporations, societies, and then trusts, Trust are that if example is who trust is that Kerala Kalasamiti trust. Hindu undivided family, you would have learned in OC recently, HUF, Hindu undivided family, associations of persons, group of persons, that is cooperative societies, companies, international financial reporting system that have been vast challenges in the global economic scenario with the emergence of globalization, liberalization, and privatization. Advent of a transactional cooperation in search of funds in order to sustain their ongoing operation. In addition to fulfilling the growth of the company has resulted in raising capital globally, cutting across international boundaries since each country has its own set of rules and regulations for many maintaining business records for accounting purpose financial reporting it becomes cumbersome. Right. So, in order to make economy more dynamic, competitive, and boost confidence among the international analysts and investors, it is important that financial statements put forward by the business organization across the countries are comparable of similar parameters. Means they should be common. Is it clear? They should be common, right? Needs for IFRS. The important economic decisions are made on the basis of financial statement in order to avoid manipulation figures and in financial accounts there is need of consistent way of deciding which elements require recognition and measurement and how information is presented in financial statement. Hence, IFRS helps to prevent material manipulation or in financial statement, right? Now, what are IFRS? International Financial Reporting Standards. Okay, I think I have always known about that. What are IFRS? International Financial Reporting Standards means, and on that basis only you have to prepare your financial statement. IFRS helps in global harmonization. Unless accounting activities are regulated, different countries will apply different set of accounting rules and regulation prevalent in each country. This will restrict uniformity and compatibility of financial statement. Hence, IFRS promotes global standards of business growth. It facilitates global investment. The convergence of financial reporting and accounting standards is valuable and contributes to the free flow of global investment and achieves substantial benefit for the capital market stakeholders. Uniform accounting policies and procedures. Almost all countries have agreed to apply IFRS, what is International Financial Reporting System. But the same of this IFRS has been converted as in the industrial as in substance in as is not different from IFRS and IMES is accounting standard notified by Ministry of Corporate Affairs and has wide range of conversions as compared to existing accounting standards. So you can see these are these accounting standards. You have to go through this. GST, goods and service tax. So before starting with it, I want the general knowledge gained by you. So you go and read by yourself and complete this. Right. What is GS? A very simple thing. You can ask your parents also if they are criticizers, they will criticize it. If they have a good knowledge, so they will see. They know it is good for the business. I want to know from you also. Yes, GST is good or bad? If it is bad, what is the reason? If it is good, what is the reason? Now, GST is a destination-based tax on the consumption. See, previously, what used to happen? We used to pay service tax, we used to pay sales tax, we used to pay sales tax, we used to pay VAT, value-added taxes. Then there was lot of tax, and we used to pay totally round about 421, every state used to apply different VAT, value-added tax. So all these were removed, and the one name is only just taken goods and service tax. One country, one tax, no other tax, and the tax name is different for different things. For hotel industry, it's the different. You would be going in having food, you are paying 18% of taxes for that. For cloth industry, it is different. Imported goods it is different. For exported goods, it is different. So it is different. Now you have paying SGST, there is state GST also, and central GST also, and IGST also, and what we say UGST. ये मेरा चार्जर नहीं है किसी right? So I had just given you an idea. You go through it and let us see tomorrow what is. Till then, take care. Bye bye.